All right. Hello, everybody. It's Rob Gaines here with Summit Edge Realty. We're doing a new format for the Monday market update. So tell me what you think in the comments. Please let us know if you like this new format. Let's go through this. Since this is our new format, let's talk about what these numbers represent. So this is Southern Indiana real estate numbers. We'll go through the numbers representing about 9 counties that cover Southern Indiana. This is only the area north of the Ohio River. So we've got Clark County, Floyd County, Harrison County, Crawford County, Orange County, Washington County, Scott County, and Jefferson County. Those are the areas that we covered. This is residential real estate only. This is not vacant land. This is not commercial properties. So here we go. New listings. We're going to compare this year, last week, and then also the last 2 years for the same corresponding time frame. So for this year, this is 146 new listings. It's a big week for new listings considering it's March 10th. This is the last 7 days total for our area. Last week we had 122 new listings. Last year we had 108, and the previous year before that we had 103. Now, interesting to note. So in April in particular of 2024, our listings for the month of April were up 25% over the prior year of 2023. So for anything to be positive on top of that, and that trend started, by the way, in March of last year, with listings being significantly higher than the previous year. 25% was the peak that we saw, which occurred in April. So if we're seeing more listings right now in March than we saw last year, that's on top of an already higher year for the last couple of years prior to that. So we'll see if that trend continues. Inventory. Again, I've talked about this many times on past recordings. So our normal trend here in Southern Indiana and a lot of the Midwest and actually a lot of the country, depending on where you're at, what you'll see is a pattern of inventory where inventory reaches a low point, usually in May or early June, and then it starts to rapidly increase all the way through about the week of Thanksgiving, somewhere mid to late November. And then it reverses course, continuing that same inventory will continue to decline all the way through December, all the way through the spring market, and then again reverse. Last year, for the first time since I've been doing this, we saw a different pattern. We saw inventory in early March reverse course. So inventory started to gain momentum, increase in numbers in early March last year. This week, we had 857 homes on the market. Last week, we had 842. So obviously, you're seeing an increase in inventory where prior to last year, we had not seen that. In 2024, we had 656 homes on the market. And in 2023, we had 626 homes on the market. So you can see inventory this year, even whether it's down or up from the previous week, we have a lot more inventory than we've had in the last couple of years. Under contract. So homes that went pending in the last 7 days, that went under contract in the last 7 days, we had 120 this week. We had 119 last week, 117 last year, and 112 in 2023. It may look like, hey, we're busier this year than we were last year. And that, on the face of it, is very true. Yet when you consider the amount of inventory, it feels to the seller like we're not as busy because more homes, again, are sitting on the market a little longer. Because when you look at the ratio of under contract versus the actual listings available, the number is down percentage-wise. Under contract in 7 days. So we've been tracking this number actually for 3 years straight now. And so what this is telling us is the speed of the market for new homes on the market, right? For existing homes. For the last 7 days, this week, we had 18 homes go under contract that were listed in the last 7 days. The week prior to that, we had 25. Last year, we had 20. And then in 2023, we had 26. This week, we had 146 listings and only 18 went under contract. So the percentage of new listings that went under contract significantly dropped week over week and year over year. All right, so closed units this year, 90. And then the previous week, we had 93. Last year, we had 72. And then a big year, 2023, we had 115. Spring break has some influence on that. When spring breaks occurred the previous years, people wanted to close on the homes before spring break and so on and so forth. That 115 was a bit of an anomaly, so I don't put too much into that. Price reductions. So homes that received a price reduction or price correction, if you will. This week we had 84. Last week we had 84. And then last year we had 66, and the year before that 59. Now, you take the percentage of homes on the market and homes that got a price reduction, the percentages are super close. So I don't take any stock. There's no real changes here, even though it looks like we have a lot more this year. The percentage of homes is very similar. All right, now next one, days on market. So this is very interesting, I believe. So this is your median days on market, and you see how this number has climbed over the last 3 years relative to inventory increasing, and yet the number of buyers, the number of pendings and closed sales not really increasing. So 2023 you had 57, last year you had 67, this year 78. Our market here in Southern Indiana, this is the period from active when it first goes on the market until it closes. So it includes the under contract period, which is about 30 days. So if we're 78 days on market, you're 48 days active on the market before you receive that accepted offer and move towards that closing. That's a median. So we've seen homes sit for 100, 120 days and get a really good offer, what the number they were looking for, because it was a unique property. We've also seen multiple offers still on properties in the last month. Really, you can still get multiple offers and be under contract within a few days. Interest rates. So I didn't put any numbers in here. What I'll tell you on interest rates is we had rates from week to week. We just follow one of our local regional banks and we tracking their specific rates because everyone's rates are different, but the trend stays very similar. This local bank that we're tracking, the rates they sent us on Friday was 6.125. The week before it was 6.625. That was a 0.5% reduction in rates. If I look back over last year in 2024 for the same week, it was 6.5%. So rates are better. Now, this is a 30-year conventional loan with 20% down. Those are positive numbers. Now, it takes a minute for buyers to recognize that opportunity and jump back in the market. Will they do it? I don't know. My interpretation of it is we've got some weak economic news coming in right now. GDP is trending lower, possibly negative for the first quarter. We've seen some bouncing back and forth with some economic policy over the last few weeks, and that caused the stock market to fall some last week, over the last few weeks, and it's also caused some uncertainty in the overall prospects for the market for the U.S. economy, which caused interest rates to fall. That is our Monday market update for Monday, March 10th. Thank you so much for watching, and don't forget to hit that like and subscribe so you can see more of these videos every week.